Are you able to hear me? No, the session is not gone. Are you able to hear me? Because some people are saying that they're not able to hear me. Okay, fine. I think centers. So basically, let's move on to the last 2 points. And as I said, monitoring the business becomes a very important aspect of having a good business plan, because you need to be able to track where you're going as per, whether it's as per the plans that you have outlined or whether there's any deviation, and you will be able to take corrective action as time goes by. At last is to devise contingency plan. If things are not going as per plan, you will have to have a contingency or a backup plan to achieve your targeted goals. So these are a number of these reasons that for which you need to have a well-documented business plan. Now, there are a number of questions about business plan. So let us just look at some of them. The first question would be, should an SME have a business plan if it's not going to seek bank funding, or SME or any other company? If we assume that they're going to be using only the promoters' funds or their own equity, should they need a business plan? The answer to that is, irrespective of whether you're going to seek bank funding or not, a business plan will be an important document that you should have, because you cannot operate in isolation without a plan. With a plan, you will be able to basically monitor what is happening in your company and try and take corrective action as you go along. And it will also be an effective tool for you to show to any of your future partners or any of the associates that you might be dealing with from time to time. So the answer to that question is yes, you should have a business plan, whether it is going to be used to take bank funding or not. And you can even make it, maybe not as detailed as one would want it to be. It can be something that you can use as a document to keep track of what you're doing. The second important question is, when investors read a business plan, what is it that they are looking at? Is there something very specific that they will be looking at? Now, obviously, investors and others like venture capitalists or private equity investors are obviously receiving a number of proposals from time to time. It doesn't mean that they are going to be reading each and every business plan that comes to them. Now, given that context, what are these investors looking at? These investors are basically looking at investing in a particular business and hoping that the business will do well in terms of generating profits, and they will be able to multiply the investments over a period of time and earn returns pretty good. So that is what investors are looking at. So it is possible that investors may not read the business plan fully. So which means that when you construct a business plan, you will definitely need to have an executive summary there, which will highlight all the key factors about your company, whether it is the business, whether it is the operations, whether it is marketing, the management, and the financials. So that is the way you need to tackle that issue, to keep the executive summary crisp and also convey everything that you want to convey. The third question is, what steps should an SME expect a venture capital firm to take with the business plan? As I said earlier, they may or may not read it, and given the number of proposals at various of these entities, it can be a venture capitalist or a private equity, they perhaps might be investing only in a handful of proposals that they come to them. Maybe it's only about 1% also. So possibly they may not be looking at it immediately, but it might possibly go to some junior level officer at their end, and if there are things that interest them, they possibly will call you for a dialogue over a period of time. So if you're going to be able to impress the potential investors at that stage, then there is a chance that you will go further ahead in terms of having other dialogues to get further interest and investment into the company. The fourth question is, how long should the business plan be? The business plan need not be like an entire 200 or 300 page document. It can even be as short as 40 to 50 pages itself, because you will be able to tell your story of the company, the story of the business, how the business is different from other competitors that are there in the business, and also should be able to impress in terms of why it makes sense for somebody to invest in your company and earn reasonable returns on that. So that is what a business plan should be able to convey. And the next question would be in terms of should you hire a consultant to write the business plan? The answer is yes and no. Now, many times, if you look at the SME sector particularly, the promoters have brilliant ideas, but in many cases you will find that they may not be able to articulate the ideas into the form of a very detailed business plan, and they might just lose out the opportunity of getting finance from the banking system. So in which case, it might make sense to hire a consultant who will be able to translate those ideas into a well-documented business plan, which will focus on the industry, the market, the financial analysis, and so on and so forth. But it is always good for the promoter or the idea creator to be involved as intimately as possible in the entire business plan. Maybe if the promoter is not very comfortable with the financial aspects of it, then he can involve a consultant. So it has to be a joint sort of effort between the ideator and the consultant, if you so require a consultant to bring out the business plan. And lastly, should you have a software to write the business plan? That again depends on the comfort level of the company's owners, whether they need a software or not. So if they have they're able to articulate their thoughts very clearly, you can write it yourself and along with the help of a consultant. But otherwise also, you find that there are a number of softwares which are very user-friendly, which can churn out exactly what a bank wants. So that is what I'm going to be showing you next week in terms of how that software is so simple in terms of getting some of the basic facts translated into a well-documented business plan. So obviously, when you're going to be sitting in front of the software, you need to have all the data that you can muster to input into the software. So we'll talk about that a little later in terms of what can be required, and that will get clearer as we also address what are the various elements in the business plan. So what should be there in the introductory pages of the business plan? I think some of them are a little detailed, but I have put in these details because it does make sense to have some of these details here. Obviously, your cover page should have your name, the name of the company, the logo. The logo is very important because it basically the logo is important because it is going to convey what the company stands for, the address, the other usual telephone numbers and email ID and so on. Next comes one of the most important parts of the business plan, which is the executive summary, because this is where you're going to crystallize all your thoughts and convey it in 2-3 pages. So this is something which has to be written last after the entire business plan has been completed. Ideally, it should be between 1 to 3 pages. It has to have the business concept, what are the financial features of the business, how much of funding is required to run the business, when is the company incorporated, what is the current business status, has something happened in the company or we're just waiting for things to happen, who are the key shareholders of the company, who are the key personnel in terms of responsibilities and what each one of them would be doing, as also what are the major achievements, if there are any. So this is what you need to have, and all of these will have to be crystallized from the details of the business report that is being prepared by you. Obviously, you will have other backup data and statistics which can be shown as annexures. So here in the executive summary, it must be taken care that there is enough clarity about what you do, given the fact that at times the potential investors may not be reading through the entire report. They might be skimming the executive summary to see if there is anything there which will interest them. So you have to be really clear about what you write here, and the presentation also needs to be as crisp and as clear as it can be. Also, in the executive summary, it might be useful to substantiate many of the facts and conclusions that you're putting out with data from industry association numbers, any market research data that you can gather, or any other information you can substantiate your conclusions. And that gives a lot more credibility to the reader or the potential investor about some of the claims that you're making about your company. So that is, in essence, what the executive summary is, and there has to be enough and more time spent on it. It can be passed around 2-3 times across people within your organization, and then fine-tuned to ensure that it is of a high quality. Then comes a table of contents, basically summarizing what the business plan has, so that in case somebody wants to rush to a particular section, they can do that easily. So we start with the first section of the business plan, which is the business description. So what does the business description contain? Now, the business description is basically to understand, what is the business that you are embarking on or have embarked on. So it is basically what you have ideated and you are aiming to achieve. So what should it contain? Obviously, here for the moment, I think we are restricting our discussion to the manufacturing sector because that has a lot of issues. The same can be applied to a service industry or any other industry or a retail sort of a setup. So the parameters would be similar. Maybe there will be some slight changes here and there. So the first thing that you need to talk about is the overview of the industry, wherein you will have to comment on what is the status of the industry, what is the current status, and what is the future prospect of that industry. So that sets a tone in terms of how your company is likely to perform given the industry dynamics there. So that is the first starting point there. Then comes the discussion about your own company. Here you will start with analyzing what is the type of business that you are in. Are you a manufacturing company? Are you a retail company? Are you a wholesale company? Or are you a service provider or a service-oriented company? So that is the thing that you need to talk about right up front. And then you go on to giving details in terms of, one, the history of the company. Now, if it's already an existing company, then you need to give some history in terms of when it was incorporated and what has happened since the date of incorporation. Or if it's a totally new company, then you talk about what the company is all about. Then comes the legal structure of the business in terms of how the business is constituted, whether it is a proprietorship, a partnership, or a limited company. Shareholders is the next thing that we will comment on in terms of what is the shareholding pattern, who are the key shareholders of the company, and more details about the shareholders. If there are shareholders who are prominent or have investments elsewhere, those are the details that is expected to be given there. Then we talk about the market needs of the company in terms of what is it that the company will serve in terms of the market need. Or is there a pent-up demand that the company is aiming to meet? Who is going to be the customers of the company? and how are you going to be selling your products. So that is what you need to be talking about. So in the business, once you know the product, you need to figure out who's the target segment and why are you targeting that particular segment. Lastly, the support systems that will be utilized. What is going to be the customer service, if at all, that's a relevant aspect of it. So those are things that one is going to be talking about here. And also advertisement and promotion activities are relevant. That again we are going to be commenting on here. So this basically talks about the overview of what the company is all about and what the company is aiming to do. Then is the description of the product and the services. Here, the key thing is, what is my unique selling proposition or USP? What is it that's going to set me apart from the competition? And this becomes very, very critical for not only the company, but also for potential investors to understand how is this company different from some other company. Is there some unique need that this company is fulfilling? And if so, what is the unique selling proposition? So it could be, for instance, if you look at McDonald's itself, there are a lot of things which are unique about it. The taste which is universal across, or maybe the recipe is something which is, very closely guarded, sort of secret. Or it could be even for, Pepsi, the sort of the formulations that they have is something which is a well-kept secret, and that is something which is there for all of us to see. Across the globe, it has very similar taste. So the USP is something that you need to very clearly define. Then you focus on what is the positioning. When you talk of market positioning, it basically means that what is the unique competitive advantage that the company will get and how it will sustain the competitive advantage over a period of time. And again here, you have to outline and detail out how you want the market and competition to perceive your product and services. So how is it that you're going to be different? How is it that the competition is going to view you in terms as a new player in the marketplace? The second important point there is in terms of what are the various customer needs that one is trying to fulfill. And also one also needs to look at how do you want various people or the customers or anybody else to view the products that you offer. So that is also something that you want to talk about. And also in terms of competitive positioning vis-a-vis the other players. So it is very similar to say that, for instance, if you look at the detergent powder, or even if you look at shampoos, for instance, I think each one has a different, various players have different positionings across the different price segments. And that happens across all the products. So likewise, how are you going to be positioning yourself vis-a-vis other competitors? Then comes the pricing strategy in terms of what is the price that you're going to be charging for the products, how have you derived at that price, and how does it compare with the price offered by the competitors, and whether you have positioned your product appropriately in line with the sort of price that you're aiming to command. And this articulation strategy is very important. And I think all of us know that, if you position yourself as a premium product, then you'll be able to get premium pricing on that product. And provided that, you've created that sort of awareness in the minds of the consumers through advertisement, branding, various promotion activities and so on. So this articulation assumes a lot of importance. So if you've not got this right, then the whole assumption of your pricing strategy will also go wrong, because this will be the cornerstone of all the financial projections that you will make. So one needs to be a little careful in terms of what you would write here. So having done the business description, we move on to the next section of the business plan. which is essentially the market. And this section again is one of the most important sections in the entire business plan. But this is a section wherein you will be deciding on a number of things in terms of what is the quantum of sales that you're expecting to make, what is the pricing that you have fixed, and therefore this is going to decide the top line and the turnover of the company, which again will set the ball rolling for your funding requirements, the sort of investment you have to make in plant and machinery, and so on and so forth. So here the question that one has to ask is, do you have the confidence that you will be able to garner enough customers to meet competition in the marketplace? So that is something that you need to have substantial data backing and ability to logically reason that out. The second thing will be in terms of, which I've already talked about, in terms of what is the sort of sales that you're expecting to get in the first year, given the current market size, the current market trends, the sort of competition that is there, and the competition which is likely to emerge. Then comes the customers. In terms of, you have to specify who your target customers for your product or services are. So basically, in order to create a customer definition, you have to target the customers in terms of some common identifiable characteristics. Now, for instance, let's say if a catering company is being set up, obviously you should be able to define who your customers are. Are you going to be targeting large offices where you think you can, strike good orders there and have a continuous source of, supply? Or are you looking only at individuals? Are you looking only at individuals where both the husband and wife are working, and that might be a target segment? So it can be a number of things there. So how you define the target customer also becomes important, because that's when you get clarity in terms of whom are you actually going to target. Are you going to target all employees, who could be part of a BP or a KP, or are you only going to target working couples in a particular geography? Then comes the market size and trends, and this is where a lot of data and a lot of analysis based on information from industry associations, market research data will be used, wherein you're going to be looking at, what is the total market size, what is the slice of that particular market that your business will get. When you talk of the market size, you can use geography, you can use company size, you can use any other characteristics to define the market size. So you will need to analyze a lot of data. So wherever it is possible, I know there will be questions which will say that, what if you don't get data? I think all of these assume that some data will be available. So even if you don't get data, you will make some sort of an assumption to justify why you want to attack that particular market segment. And then the target market. I think just as we talked about target customers, you also need to target the market as well. Competition. I think there is no business without competition. So you have to look at the competitive landscape, not only what the landscape currently is, but also in terms of what it could be potentially. So that is something that you need to do very clearly, so that you're not caught off guard once you start your business and find that there is something else. I think we have seen that there are so many of these small retail shops, chain of retail shops who sell mobile telephones, and they do well for some time, and then you suddenly find that they no longer exist because they underestimated the future competition which would come about in their particular area of operation. The SWOT analysis needs to be done very clearly, which is basically the strengths, weakness of the opportunities and threats of yourself, and also compare it with what the strengths and weaknesses of the competition is. That is very, very important, and that will help you peg where the weaknesses of competition is and help you to see if you're actually bridging those weaknesses when you deal with the customers or your target market. So competition analysis. Now, all what I'm saying right now is to the extent that you can. Maybe if it's an SME and it's trying to do something, many of it you may not have data to be substantiating that. So to the extent that you can fully articulate and justify your stance, that is what is required in a business plan. Then comes the estimated sales. Now you cannot operate without knowing what you want to achieve. You cannot say that my business plan, I don't know what I'm going to achieve. Let me start the business and then I will figure out. There is no one who is going to listen to that sort of an argument, whether it's a bank or whether it's potential investors. So you should be able to arrive at a reasonable estimate of what the likely sales volume and sales value is. And that is a must do from a promoter's point of view. And here you should be able to highlight what are the advantages of the products. If you are going to be selling that product, or if it's a service, what are the advantages of the service that you offer, the customers, what is the size of the market, and competition. Now, all of this analysis is something that you would have earlier on done when you filled out the other parts of the business plan. Now, the sales volume and the sales value that you estimate will have to be broken down into quarters. Now, this is basically for you to monitor at a later point in time once you start your production activity. Let's assume that you have targeted 3-4 crores in the first year. It might make sense to break that down into 4 quarters so that you're tracking how you are performing vis-a-vis what you had planned out, and to also be able to take corrective action from time to time. Having done that, you move on to the product and operations. Now here, the business idea or the product idea that the entrepreneurs had also needs to be translated into, I think we talked about the marketing part, but you cannot market unless you have manufactured that particular product. So what stage is the product development under? So have you finished with all your research and development activities? Are you ready to go onto the shop floor once you get the funding and once you have the plant and machinery in place? So that is something that you need to be able to clearly highlight. So that is basically what the entire product plan would be. You also need to explain, how is a product created in terms of the entire manufacturing process. Also, the details of the product development costs. Where is the factory or the plant going to be located? What is the sort of labor requirements? So by now, all of you get a fairly good idea in terms of various pieces of the entire business falling into place. Because once you know that you're going to make a product and you have to manufacture so many units, then you will be able to configure what sort of machinery you need and how many people you need to basically produce the number of units that you so desire. So when you talk of the product development status, you will give a schedule in terms of what the status is, where are we in terms of the product launch. So all of these are things that will be expected with some amount of clarity. Because when you go to a bank with a plan, you cannot be wishy-washy there. You need to be very clear about what is happening. Otherwise, just because banks also receive thousands and thousands of proposals. So if something is in a very early stage and it's all in the not very concretized in terms of the thought process, it is something which is not going to be looked upon by the banks very favorably. Then we move on to the production process in terms of what is going to be the production process that needs to be outlined. For all you know, the bank might have dealt with a very similar product, but definitely it makes sense for one to be giving what the production process is, what is the sort of equipment that you have. Are you going to be buying the components, or are you going to be manufacturing some of the components in-house? So I think all the possible details in terms of manufacturing that particular product needs to be very clearly outlined. What are the locational advantages of the plant? What sort of labor force that you will have? what is the layout of the plants. So basically the entire works on the production process will also be given. And then details on the product design and the development budget. What is going to be the cost of production? You need to have some idea of it. Obviously, it can be fine-tuned once you start your production, but basically based on the configuration of the plant, the product that you're going to manufacture, you should be able to arrive at a reasonable estimate of the production costs. Labor requirements. I think all of us know that in today's context, labor is a big issue in terms of getting the right sort of workforce with the right sort of skill sets and trained labor. So again here, an estimate of the number of people that you need on your shop floor. Now, are you going to be able to tap the local workforce around the area that you set up the plant? Is the labor going to be trained? If not, you also need to plan out a training schedule for them if it's something that they are not trained. And at the end of it, once you have zeroed in on the labor and the sort of people that you're going to hire, you'll also have an estimate of what the total cost of labor is. Now, having done all of these, we will get a clear idea of what are the expenses and what are the various capital expenditure requirements. So you will know what the operating expenses are. You will know the capital expenditure for procuring the plant and machinery, and you will know what the cost of goods sold are. So basically, all the costs that are required to manufacture and sell your product. So right now at this stage, we are very much ready to look at the financial numbers. You will be able to cast the financial numbers at this point in time. Then we go to the, I think before that, we also need to look at the section on sales and marketing. And essentially, here you look at the selling strategy. Now, how are you going to get the customers to buy the products and or services as the case may be, and achieve the sales volume and sales value that you have projected. You also have to articulate the selling and distribution strategy. Are you going to be doing it directly, or are you going to have a very elaborate distribution setup with dealers and wholesalers and so on? So that is something that you will articulate. Now all this will happen only if you're very clear about what you have talked about in the product, the market, the customers, the pricing. So unless you have clarity on all those 4 counts, you will not be able to articulate your selling and distribution strategy. And hand in hand is the advertisement and promotion campaigns. Now some SMEs may not want to do the advertising and promotion, or maybe we are talking of larger companies which are or companies are aiming to become large. They might start with a small advertisement and promotion budget and then look at ramping that up over a period of time. So before we get into the financials, the management becomes extremely critical. And I think in any evaluation, whether it is existing company or new company, one of the important things is the analysis of the management. And I think if I were to give a weightage for it, I would give a large weightage to the management of the company, because ultimately they are the ones who need to ensure that all of these which are outlined in the business plan happen. So again, here a strong management team can make a success of business ideas. I think it's one thing to have an idea. I think there's another thing to translate that idea into fruition in terms of ensuring that everything that you have said is going to happen. So unless you have a really strong team, you will not be able to do that. There are a number of instances where an entrepreneur himself, along with a team of people, have succeeded. Now it all depends in terms of how strong the team is and how committed the team is to achieve the sort of goals that you have set for yourself. So here you need to outline the description of the management in terms of what is the expertise that they bring to the table, what are the responsibilities that they're going to handle, and whether the management, the senior management team have complementary skills that they bring on to the table. So that is something that you need to be very clear about in terms of mentioning that. And I think we did talk about, the shareholders and the ownership earlier on. So if you have not covered it in detail there, then you might have to cover the same thing here in detail, or you can leave it out at either of the two places. Then come the board of directors and advisors. So if you're thinking of constituting a board and you already talked to a couple of people to get them on board, then you need to give details in terms of who they are, which other boards do they serve on, and what is the sort of experience that they have. In many companies which are startup companies, many times the board members are used as sounding boards for various facets of the business. Maybe some board members strong in finance might have strong connections with the banking sector. There might be others who are strong on the manufacturing or the marketing front. So it is good to get again a fairly good mix in terms of the disciplines that they are experts on, and get them on board. So that is why the reputation of the board members also becomes important. Also, the support services. It is good to outline who are the other people who will be engaged with you, either in the legal side or the auditors that you plan to engage at some point in time. Maybe the PR agencies, if it is maybe at a later stage, maybe not for the startup companies. So who are the people who are going to be part of it? So this again you will talk on the management side. After all of these, finally comes the financials. I think one thing that I would like to highlight here is it is a common mistake is not the right word. It's a common misnomer that everybody looks only at the financial numbers. It is not so. The financial numbers is essentially an outcome of the business that a company is doing, and also the strategies that the management has put in place to achieve those business goals. So finally, everything translates into numbers. So it is not that bankers or anybody else or rating agencies or others look only at numbers and then decide on a number of things. Now, the financial number is one way to compare how the company is doing from time to time and how they are performing vis-a-vis some of the other companies in similar space. But how do financials come about? Financials come about because there are certain things that the management is doing. There are certain businesses that the company is embarked on. So all of these translate into numbers. So if you say that this is the market that the company is looking at, and this is the price that they are looking at for a product, and this is the quantity that they sell, that is what is getting translated here. So the viability of the business and the soundness of the business is what the financial statements are aiming to test and check. So the first thing there is the risks. You have to identify what the various risks that will be there and how you plan to mitigate those risks. So obviously when you start off, only then you will know various things that will sort of impinge on you. For all you know, there could be a price cut by competition. Now you have to be reacting to that. So what is your action plan? That's something that you need to very clearly articulate. I've just listed out some, it may be a totally different set of risks there. Or you might lose a key customer along the way. Maybe after 6 months, whomever you thought had promised you orders has backed off and now he's dealing with somebody else. And all of these happen in business, and that's a reality that all of us know. It could also mean that sales projections are not achieved, and what do you do? Last is labor. You're not able to get the sort of labor that you want. So you will come across a number of these issues from time to time. So you have to anticipate all of these, maybe not all of it, maybe a fairly large percentage of it, and have an action plan for it. And that's what all businessmen do, and and many of them are successfully doing that time and again. So essentially, after all of these, you have to prepare 3 statements. Now, the preparation of the statements, if the promoter is not very savvy with the finance, obviously you're going to get a financial consultant for it. And all of these are must-have statements in a business plan. So you need to have a cash flow statement which will give you the sources and uses. I'm going to be running you through one business plan for a manufacturing company, and also how some of those financial statements are. Obviously, filling in those statements, etc., something I don't think we're going to have time today. Maybe we will see that in the next webinar. So you're going to be studying the sources and uses of cash and also the cash flow statement analysis. Now, what is this cash flow statement going to throw up? Now, the cash flow statement at the end of the day will throw up where is the money coming in, where is the money going out, am I going to have surplus cash at the end of the day? And you analyze that particular statement to see what the issues are. If there's a problem, then you have to highlight where the problems are and try and correct it. If there is no problem, you will narrate why there is no problem and where the strengths are. So that is on the cash flow statement. On the financial statements, the other thing that you will be talking about is the balance sheet. Here, you have to have the promoter's own balance sheet of his assets and liabilities, as also the projected balance sheet of the SME for the next few years. I know it is a little difficult to cast projections beyond a year, given the fact that there are a number of uncertainties around us. Interest rates are changing constantly. Exchange rates are moving up. Commodity prices are changing every other day. Oil prices are changing. So it might be a little difficult to project, beyond a year with reasonable certainty. So you can give a one-year projection and then assume, a certain growth in sales and a certain growth in expenses. So that is what you will be able to do, unless there's a major capital expense. Unless you have your plans very clear beyond a year, you might find it a little difficult to do that. But it might be useful to have, some sense of what the top line or turnover will be and try and achieve those goals. So typically promoters have a turnover goal and also have a profit goal. So if you have one of those goals, you can always back work and fill in the rest of the projections. Then comes the income and expenditure statement. Again here, you will do a projection for the next 1 to 3 years. And in the first year, it may make sense to give a breakup of a monthly income and expenditure statement. The reason of doing this is to ensure that you know where you are as far as both the income and expenditure are, and if you're going to be way off the mark, then it might be time to take corrective action. Now, from my interaction with a number of SMEs, I have seen that many times the promoters do not pay much attention to some of these financial numbers. They might typically look at it at some point in time. So it is important to keep track of the month-wise income and expenditure statements with really, really close monitoring. Because if there is going to be a significant deviation on the income side, then many of the numbers that you have projected will be out of place. So that is on the income and expenditure statement. And then you also will have an idea of, obviously when you do the liabilities itself, you will have an idea in terms of what the funding requirement is. The reason I put this out separately is you should know what is going to be the funding mix. When you talk about the funding mix, you should know how much of the money is going to be put in by the promoters and others as equity, how much are you going to borrow. So that ratio, the debt equity ratio as it is called, or the gearing or leverage ratio, is something that everybody will be keen to know. How much are you going to be borrowing? And how will you use these funds? Where will you use these funds immediately? How much will you use for plant and machinery? So the uses of funds becomes important. Now, when you're going to be talking to potential investors, one of the things that will come up is in terms of why should the investors bring in equity capital? Now, there is nobody there for charity. I think investors are there to make good returns on the money that they invest. So you should be, which is why the profit and loss and all these financial statements are important. So you should be able to articulate some of these ratios in terms of what is going to be the return on investment, and you can calculate that number. Some financial ratios can be calculated and put out there. Obviously, everybody is going to be analyzing each of these information bits with a close tooth comb, because they want to ensure that these numbers are realistic numbers and tie up with the sort of business plan that you have. Also, it might be a prudent thing to mention the downside of the returns and why that downside will happen, so that the investors are also very clear that if there's an upside, this is what they are likely to get. If there's a downside, this is where the returns will come down. And lastly is, what is going to be the exit plan for the investors? When is it likely that the investor will move out? Because they might have a defined time frame and a targeted return when they put money into the business. So maybe, they might exit when there's a public offering by the company. Let's say the company is trying to raise equity from the marketplace. That might be a time that they might want to exit. So those are things that need to be talked about in the funding requirement and the ratio section. So this is broadly what you will talk about in the business plan. Now, I'm going to be taking you through some of the business plans. I think what I mentioned here was what should be there. So now let us look at some of these examples from a retailer perspective, or a manufacturer perspective, or a service provider perspective. So maybe I'll just take one of the. I think there will be a lot of questions at the end of it. So maybe we'll just start with the a manufacturing company to see what is there in that particular business plan, and also look at some of the financial numbers for it. Okay, I think I've left out the cover page and all. That's not very critical here. So maybe some of the expenses here. Okay, here let's start with the executive summary here. So what does this company do is what is there in the first paragraph. So basically they design and build custom bicycle frames to cater to the specifications of the racing professionals in the world. And I think one of the other important points which is mentioned there is that basically the competitor cyclists have used whatever the founder, that is Mike Giro, has manufactured, which has basically helped them win races. The other important point mentioned here is that with greater interest in the competitive cycling, the demand was also increased quite significantly. So there is, a fairly great demand in terms of, mountain biking. So I think here very clearly articulated in terms of what is the business they are in and why they got into this business. It also suggests very strongly that there is a fairly good market for the business. And again, I think if you'll read this last sentence here, it says based on marketing projections, and post the Olympiad at Atlanta, there is a great demand for mountain bike rice. So this is where it gives very good clarity in terms of the fact that the demand is not a problem at all, because there is going to be a fairly good demand for this particular product. The next paragraph, that is this paragraph here, basically outlines the fact that this company, the Breakaway Bicycle Company, is seeking finance basically to install newer workstations and having additional designer builders. So they also give out the reason why they need the funding, and also give you details about what the funding is, how much they need, what is the salary expense, what is the labor expense per month. And they also say that if the investment is made, you're going to be having a 25% increase in the bike frame sales, and also give you a good idea of what the revenues are, and for not only 2000 but also for 2001. So this gives a very, very clear picture in terms of, I think, to a reader, or let's say it's a bank, the bank is very, very clear. Maybe the initial round of interest will be pretty huge because a lot of things is very clearly written. One, in terms of the capabilities of the promoter. Second is the market demand. The third is some data which has been substantiated with facts. What is the funding requirement, and what is the sort of sales turnover that they are able to achieve. So it is a fairly crisp sort of executive summary that you have here. Then you move on to, obviously, you can look at Indian companies. Some of you might ask, why have we not looked at an Indian company? Very similar thing. I just took this because it was a little easier to read it through for all of you. Now, if you look at the overview, then there's a business overview in terms of, when they started the business, what they have done, how they have, become a larger company, how many people they employ, and who are the customers of Breakaway. So that is the overview of the business. Then you get into the business structure in terms of who are the, how is it constituted. So basically it's a closely held sort of a company, and there are 3 shareholder directors who are all working as different functionary heads. So one is the director of operations, the other is a finance person, the third is a marketing person. And then we come to the experience of each of the key people there. So I'm not going to go through each of those. So basically, it outlines what his credentials are in a fairly good measure. So basically, they all come to this company with a number of strengths. They've all been involved in bicycling, and have made inroads. If you look at the finance person, again, the finance person is she's highly accomplished, and have also managed the company well. And I think one of the important points which is mentioned here is they have managed this company very well and have prevented the company from making losses when many of the other companies were making losses in the early 1990s. So it essentially shows that the marketing, the management team has been pretty strong. So this is the marketing data. I think wherever possible, you need to fill in that data with statistics from various associations. So here, basically, they have talked about the Department of Transportation and the number of cycles that have been purchased. A fairly good idea of the segmentation there and how the bicycle market is likely to go up. Then again, there is a reference to another survey, which basically substantiates the fact that what is my target segment and what is it that the individual is likely to spend. So it helps the company get a fix in terms of what the pricing strategy should be and who the customers are. And also the profile of the customers, what is their age group and so on and so forth. So again, a fairly well detailed. So all of this is possible because they've been able to get this data and the data is documented there in that particular industry. But again, talks about who the bicycle riders are, what are the market shares of the large companies of the custom bike frame and so on. It also goes on to be frank in certain aspects, which says that Breakaway is not currently among the group of 5, and we meaning if Breakaway can grow as they have planned, they can get into the top 5 at some point in the stage. Then this outlines the marketing strategy in terms of how they're planning to sell it. So currently they're selling it through catalog sales and mail order sales. They also outline, the future strategy in terms of how they want to sell the bicycles. And they've also figured out that internet is a particularly effective means of advertising. And then they outline what the advertising strategy is, which is very clearly articulated here. And they also talk about sponsoring these bike events and so on and so forth. So that is on the marketing strategy. Then comes what is their strengths. That is the SWOT analysis that I talked about. What is the strength of the company? So they have outlined the strengths in terms of the good reputation there. They've also talked about the innovative approach to designing. And I think they have been frank enough to say that being a small company, they have greater flexibility to try different materials, geometries, and welding methods. Weakness, because of the small size, it is relatively an unknown name amongst non-professional cyclists. So that is on the weakness side. And the opportunities, I think what they clearly say is if they get the money, the opportunities are immense. And given the fact that the growth rate of the bikes or the bicycles is expected to be fairly large, they will have a reasonable amount of potential there. Then comes the threats. It basically talks about how in the past some of these companies went out of business because they had not foreseen the mountain bikes advent, and number of bicycle frame builders had to close down or merge with some of the other companies. And essentially they take a realistic assessment of what this market is all about. Then comes the financial numbers, wherein they get into the unit price of each of these frames. And also they take a position in terms of the financial projection. What sort of pricing should I assume in the financial projection? So this is also something that they have listed out. They also calculate all the costs that are relevant, unit costs of material and labor incurred in building a bike frame. So this is something which has to be there, because if you don't have these costs, you cannot cast a projection yourself. You cannot assume something. I think when you go to a bank or an investor finally, all of what you have mentioned there also needs to be substantiated very clearly. Then comes all the other costs. I'm not going to go through each of it, but basically to show you that costing becomes important in terms of what should be the inventory cost, what should be the labor cost, how are you projecting an increase in each of these costs. And then comes the capital expenditure for the capital equipment, and it says that the cost of machinery for each workstation is $20,000, and basically says that if they get a necessary financing, they will place this order. And again, they obviously need additional space, so they're essentially looking at leasing that unit which is adjacent to their existing workshop. And then they've looked at various alternatives. Should we look for leasing, or should we look for having everything under one building, and so on and so forth. So they've essentially justified what the best option for additional facility space is. So from this, it gives the bank or the reader or the investor a very clear picture in terms of what is happening in this company. Now, what will the bank or the investor do with data? We'll now go to how the financial numbers look. What should be then the financial statement? Now, for a bank, since a lot of this data is being provided with a lot of these assumptions and backup data, it makes the task easy for a bank because they can refer to each of these and see whether what is mentioned in the business plan is right or wrong, and then take a calculated view in terms of whether the company means everything that it has actually listed out there. So once there is clarity on that, then the bank can take a decision of funding or not funding. So what will the financial statements look like? So essentially you will have the revenues. We will talk about the I think important here is the assumptions first. So I think what you will need to do is to give a month-wise breakup of what the assumptions are in terms of the mountain bike frames and also the road frames, so that will give you a total number. Then they will also give a breakup in terms of what the European sales are and what the US sales are, and then calculate the overall revenue. So this is what you will have for 2000. Now, so this is the number that will be plugged in here. Then based on the data that you have for the expenses, okay, this is that, sorry. So based on the data that you have for the expenses and the cost of production, you will compute all of these numbers here and arrive at the operating income, the net operating income, and the net profit after tax or profit after, or the loss, if, as the case may be. So that is on the income side. Now on the balance sheet, likewise, again, you will compute the assets and the liabilities. So all of these are essentially linked. So I think that is so all the three sheets essentially are linked. So you will get the assets and the balance sheets. And then comes the cash flow statement. So essentially you look at the opening cash flows and closing cash flows and arrive at the final cash flow number for the year. So this is the projection you will have for 2000. So what the cash inflows and cash outflows are and what the final number is. So you can also make a commentary on the financial numbers if you so want to do that. Now you'll do this for the first year, then again you'll have a projection for the second year in 2001 and maybe you'll have it for 2002. Now the most important thing here is to ensure that all of these numbers here are tying up with the business plan. These numbers here on the number of frames that is going to be sold, the income numbers should all be very clearly articulated. So for 2000, if these are the numbers, then you know for 2001 there is a particular growth that has been projected. And all of these are numbers which have been articulated in the marketing strategy of the company. So that is something that you need to ensure that happens. So this is broadly what it is for a manufacturing company. So I think similarly you can do that for a service-oriented company as also with a retail sort of a company. Okay, I think someone has asked a question. I think can we look at a service provider plan also? Okay, I think before that let me see if there are any questions. I'll take the some of these questions later. I think one of the questions was, can you give us some live examples for better understanding? I think that has been addressed. I think Mr. Atul had also had that question. Okay, I think there's a request for a service provider plan. So I'll show you that and then we can move on to any questions that you might have. And also I will take up some of those questions that is already there. I think someone has asked, what is SME? SME is a small and medium enterprise. So it's a small and medium enterprise. Okay, I think there's some other interesting questions. We'll come back to that. So let's look at what we have for a service provider. Okay, I think I'll answer all your questions to you. So let me just finish with this because then I will take all the questions which have come now and will come. I know a lot of you have a number of questions there. Okay, now let's look at the computer development strategies. Okay, and I think a lot of us will be able to relate to this. So basically, it's a new company that will rely on proven skills of its founder to take advantage of the growing need for computer training. So basically, it says, I think at the outset itself, it talks about the strength of the founder. And there's a founder who obviously has had some experience in computer training, and it has positioned itself as a high quality trainer in Chicago. And it also outlines what are the various courses that it will offer. So it also says what they will start offering in the future in terms of creating a website. So basically it says that where is the demand coming from? Constantly evolving technologies and software offer small businesses an opportunity to work smarter. So it says that market research has shown that computer training is one of the country's fastest growing service industries. Now, what does it convey to the potential investor or the potential bank who might be funding them? It says that basically there is good demand for the services that will be offered. And it also says that CDC is going to be able to capture the market share in the first year of operations itself, and will also generate profits, but there is not much of investment that they need to make. So that is the advantage from a contrary to the manufacturing company where you have to invest in manufacturing setup, the plant and machinery. A service provider need not make such a elaborate sort of investment or capital expenditure in a plant and machinery. So that is one of the pluses there. And here it talks about the first year revenue projected to exceed $350,000. And I think someone asked, what is USP? USP is the unique selling proposition. What is it that I have to offer which is different from my competitors and is very unique? So here, CDS's USP is that they will develop unique electronic workbooks that will serve as training aids. And it has articulated its marketing strategy very clearly and its target segment also. They have said that they will target the fastest growing segment, and they will also specialize in just a few software applications. So the focus, and I think it's very well worded here, it says the focus is extremely clear. This tightly focused approach makes it easier for them to establish and retain a position as an industry leader. So the executive summary is very, very clear in terms of, one, the market demand being very good, how they have positioned themselves in the marketplace, the relatively low investment in capital expenditure on machinery and other allied facilities, and the confidence with which they say that they'll be able to generate profit in the very first year. So if someone is going to read this, they're going to be having very good interest in terms of looking at this company. So this is what when I meant that the executive summary is something which needs to be a write-up which will interest potential investors. So someone is going to see 3-4 paragraphs like this. Maybe you don't need to write 3-4 pages also. So you're bound to impress the investor. And then for the investor to dig deeper and find out whether all what is said is true and substantiated by facts. So that is the executive summary. Then we get into the company itself in terms of details about the founder, what has he done, what is the experience. So that is important because everything is hinging on the founder himself, basically the experience, and who's going to assist them. So basically it's not a big team, it's only two of them. And the second person, Ms. Ho, is also a person who has considerable training experience, and we're confident that the high standards that the company has set for itself will also be met. I think the service part, I think we've already talked about in terms of what is the service that they are going to provide. What is the sort of recurring expenditure that they will have. So they are able to get the facilities or the space where they will have this training program at a substantially lower lease charges compared to what they would have normally paid, which they are able to translate into discounts to their potential customers or clients or students. This is the USP that we talked about, which is the workbooks, the electronic workbook, which the founder himself has developed. And this section basically outlines what is all the USP about and what is the feature of this workbook. This is the history of, there might be some repetition of the key personnel and the founder, so it may not be as detailed as it is given out here. But since it is only the founder's name on which this whole company is being run, maybe it was thought that this might be a better place to give more details about the founder himself. Then comes the marketing plan, the market analysis, wherein in the executive summary itself it was outlined that the market is going to be fairly robust and there's going to be a great demand, and they have positioned themselves well there. So the use of data is very important wherever it is possible. For instance, here they have quoted, the management decision information system. Now, if you were to look at, India as another example of companies there. If you want marketing data, you can get the ORG data, or if you want, some of the other data relating to market shares, you can get ORG data or the MARC or the IMRB or any of those data which are pulled out by the market research agencies. And there are a number of association studies that we have today wherein you can pull out data on the industry. Now, let's say if it's a small and medium enterprise and they are part of the auto sector, it is important to know how the auto industry is going to perform. Or if you're going to be part of you're going to set up a new hospital chain, you should know details of demographics, details of existing hospitals, details of, amount of money spent on healthcare, what is the government doing, and, so on and so forth. So for each industry, obviously, there are certain set of data that you can collect and present there. So here there is effective use of data here because the data is well documented there for the industry. So they have quoted at least 3 different data sources. One is the article in PC World, one is in that particular state that they are in, and one is a national sort of a study that they have undertaken. Then they outline the marketing strategy here and talk about what the advertisement strategy would be and what is the preferred mode of advertising. They're saying it is word of mouth. They're being very frank and blatant about it, saying it's word of mouth. And what are the vendor contacts? So I think it's a very clearly thought out, strategy in terms of what they will do. Maybe they had the advantage that there was only or maybe the founder himself was doing all of it. He was able to articulate the strategy very clearly. Maybe he was technically sound and he knew what he was doing. And then he talked about the pricing strategy very clearly, where he says that whom he will target and why he is targeting the cost-conscious small business owner. Then is the action plan. Basically, he says that I'm just going to have 2 employees. I don't need a big setup for the sort of training that I'm going to be doing. And also clearly says, which are the slow periods in the business, which are going to be the peak periods, what sort of salaries he's going to offer the other faculty member, and so on. So that is what they have detailed out. And how they will collect the money. I think here one of the important things here is they want to overcome the problem of collection of these receivables or the fees from the attendees of this training program. So what are they going to do is what is mentioned here. Then comes the expenses in terms of the computer equipment, training facility. So it is all fairly well detailed. So I'm not going to go through each of those because I think since I'm scrolling, you can also see the sort of details that they have got into. And then comes the financial projections, which is as detailed as the rest of the business plan is. And again, very similar sort of spreadsheet which will be used. Okay, so I think there are a lot of questions there. So let me start with the first one. And I think you can raise in your questions here. Okay, I think the first question that, okay, I think let me answer the first question. So I'm just trying to figure out which is the order that I will go. Okay. The first question that many of you have asked is, can you share this presentation and can we download all these things which are there? I think you can see it all in this mycai.in, wherein this whole presentation and the entire video recording will be there. On whether you can download the, whether you can get the service balance sheet, etc. Let me just get back to you whether those can be, emailed to you or what. That is something that I will revert to you. Now let me start with, okay. I think the first question which came in during the early part of the presentation was, I think, from Mr. Bhaktesh. His question is, what are the chances that the business plan will get hijacked by the venture capitalist? Okay, that's an interesting question. Now, the chances of it getting hijacked in the sense that obviously the entire ideation is there in the mind of the entrepreneur. So the entrepreneur knows what he's going to be doing. Obviously, he's not looking at one venture capitalist or one funding provider from time to time. Now, it may make sense to have some sort of, confidentiality agreements or trust agreements with the venture capitalist. So that is something that you can sort of engage there. So there is a possibility that if you're not dealing with someone who's very sound in terms of ethics and integrity, you are going to have an issue there. Okay. Now, someone wants to know what is the difference between, I think Mr. Uma Maheshwar Rao, I think wants to know the difference between, what is the difference between uses of cash and cash flow? Now, basically when you look at cash flow, when you talk of cash flow, there you're essentially looking at the cash inflows and cash outflows. So when you talk of uses of cash, they're basically the outflow of cash there. So that is what the cash uses mean. So where will you use cash? The cash can be used for a number of activities here. Let me just go back. When you look at the cash flows, as you see here, the cash flows can be used for making your interest payment, your advertisement expenditure, the bank service charges. The cash inflows are basically the cash collection that you make. Now there is a difference between the income and the actual cash that you get. Let's say when you book 100 lakhs of income or 1 crore of income, the cash inflow might be only 80 lakhs because 20 lakhs might be in the form of receivables or debtors. So the cash outflows are this. When you talk of cash flow statement, it is a combination of the cash inflows and the cash outflows to see how the overall cash position is at the end of every month or at the end of the year. So that is what the cash inflow and cash outflow is. Yeah, I think that's what you said. So I think what you say is right. The inflow and outflow of cash are all part of the cash flow statement. So in other words, sources of cash is essentially the cash which is coming in from your sales that you make. The uses of cash is the cash outflow. So one is the cash inflow and the other is the cash outflow. Okay, I think Mr. Bhaktesh has another question there. Maybe we'll have to stretch beyond one because I'll try and answer as many of them as I can. Okay. I think Mr. Bhaktesh says our business planning is till 2020. That is for the next 7 years. Does it make viable sense to do it? What are the vital statistics that we need to be careful about? I think it's a very good question to ask. While I might have said that it might be a little difficult to make, I think companies do have what are called as the immediate plan, medium plan, and also a long-term business plan. And I think it is important for companies to have that because it will give them a perspective of what is going to happen over the next many years. So you might have a medium-term plan. Your immediate term plan might be to be a 50 crore company. A medium-term plan might be to be a 250 or 300 crore company. A long-term plan might be to deal with a 1,000 crore company. So it is important to have that perspective in mind and aim towards achieving that. Now, let's say that you start off in year 0 and you're trying to look at a 10-year plan. A lot of things might be unclear or fuzzy at that point in time, because you'll be wondering, from 100 crores, how am I going to reach 1,000 crores? But then, unless there is that plan there in place, you will never want to achieve that 1,000 crores. Now, how you achieve that 1,000 crores? You might acquire companies in between, or you might go to different geographies, or you might diversify, or you might acquire another company. But it is good to have that perspective in mind, so that everybody in the company and the organization are focusing on putting their mind together to see how that can be done. And as a promoter or as the owner of the company or as the MD of the company, it is important to do that, so that somebody is thinking of growth and somebody is thinking of the big picture all the time. So you have to be, what should you be careful of? Obviously, you will know what the top line is. How to achieve those numbers, you will have to figure that out. It cannot be an exercise in Excel where you will just increase something by 5% and 10%. So that is not something that will work out. You have to look at strategies like, am I going to acquire some company? So that is called as the environment scanning. Is there some other company that I can look at? Should I look at some other business? Is there some activity which is growing in the marketplace that I can target? So all of these are things that you need to look at. Okay, I think Mr. Atul has asked another question there. Not all costs can be predicted accurately. How do you account for contingency expense or unplanned expense? Obviously, I don't think when you make a projection, all costs you will be able to estimate every cost accurately. So you will make some amount of cushion there, but the cushion cannot be an unduly high sort of cushion, because then it can sort of impact the profit numbers that you are generating. So that cushion will have to be decided on what you think it will be. It should not be a very substantial percentage of the entire thing. Maybe it can be, you can have an expense of about 5%. Where will the contingency expense come about? If your raw material prices increase, for instance, or the power and fuel costs go up for whatever reason, or your labor costs go up, all of that you can see what the percentage hikes have been over the last compound annual growth rate of how the expenses have moved up over the last 5 years or so, and see how you have projected that. And then assume, even in the projections itself, you can make that increase and justify that increase. Maybe you don't need to have a separate head which will say contingency expense. Okay, where in the business plan and under what heading? Typically, you will not make that heading separately and say it's a contingency expense. You will factor in an extra increase in that key expenses. See, typically in a manufacturing company, bulk of your expenses are the raw material expense, which will account for about 50-60% of your total costs there. So some adjustment can be made there, some can be made in power and fuel, and some can be made in the selling expense. So that is typically where you will make. See, the moment you make contingency expense and have a separate line item there, it will start raising questions. The bank might ask you, what is this contingency expense? You cannot say that I've just I put that expense just to take care of something. That might, make us look like as though we have not analyzed the company well enough and have just put in a number there for the sake of putting in there. Okay, so that is there. Okay, I think Mr. Umesh has another question. Actually, someone has asked me, how do I interact verbally? You cannot interact with me verbally on this webinar. Maybe that's something that we'll figure out. This particular webinar is only this thing. Okay. I think Dr. Rana has asked a question in terms of how are small and medium defined. The small and medium are defined based on the investment in the plant and machinery of the particular enterprise. I think, if I remember right, I think micro, small, and medium are defined, I think 5 to 10 lakhs, 10 to 25, and greater than 25, unless there was a recent amendment. I can clarify that to you at maybe offline. I think USP is something that I have classified. Okay, I think another interesting question by Mrs. Binia. How can you forecast a balance sheet for a startup company? Will that be a fully estimated value? I think this is typically where entrepreneurs have issues. Now, when you forecast with not only the balance sheet, but even the entire financial projections, how will you forecast that? I think there you need to have absolute clarity in terms of what the market is, who's the target segment, how many units or how many products are you going to be selling, what are you going to be selling there, what is the per unit realization. So I think those are things that you need to start up with. And then as I told you, I think one of the things that startup companies need to do is to look at that 1 year sales and break it up into month-wise sales and month-wise expenses. So once you, obviously the first year is going to be a very traumatic year for everybody because you don't know how things will happen. Many times what you have planned may not happen only. But nevertheless, you have to have that confidence based on how you have interacted with potential customer segments. See, the cost part is fairly clear because you know that once you're going to produce so many units, you know the configuration of your machinery, how many people you need, what is the cost of the machinery, cost of raw material, and so on and so forth. The key thing is your sales, for which you need to say that if I'm going to be doing 1 crore or 2 crores in the first year, this is how I'm going to expect my sales to unfold. So that is what you need to be doing. And then you have to keep rolling that plan onto, let's say the first month, ideally for a hypothetical situation, let's say that your sales was, 1.2 crores. So every month you had to do a sale of 10 lakhs. So how will you do that 10 lakhs is what you will start worrying about at the beginning of the month. If you don't achieve 10 lakhs, you will keep rolling that over and keep coming up with newer strategies there. Mr. Bartesh has another question. Are there any websites which will give the overall market data in short? Now that will depend from industry to industry. So various industries will have various associations and various sets of trade data which are available there. You will have CMIE having data. You will have, the automotive, ACMA having some data for the auto sector, the textile sector. So there is no one place that you can pull out all this data and say, different research houses have their own set of data. So if you do a Google search and on the internet and find out, you'll find that the data that you get, there will be a number of them there. Okay. I think Mr. Umesh has another question. Which parameter plays important role in making the business plan successful or unsuccessful? Okay, that's a very interesting question. In my opinion, I think every part in the business plan is very important. I think that is where you put your heart and soul into ensuring that you articulate what you think about your own business in a very honest and very forthright manner. I think every part there is important. But at the end of the day, you also need to be doing well, and the people who want to invest in your company also need to be doing well. So you need to, every part, in my opinion, is important in the business plan. Whether the first document that you're going to be furnishing to a potential investor or a potential bank that you might be dealing with. So that is something that, in my opinion, everything is important there. And how you make those assumptions. I think the key thing to make a business plan successful is to have done enough and more homework on every aspect of it. There should not be a single area where you think is, okay, I don't know and I'll just put some number or some figure there. So that is something you should not be doing. You should go that extra mile and get whatever data that you want. Also have whatever discussion that you want with potential customers, potential, potential suppliers of your equipment or materials and so on and so forth. Ms. Rashmi has asked a question, what is DSCR? DSCR is basically what is the debt service coverage ratio, which essentially is a profitability measure, it's a coverage measure which basically tries to find out at a profit level, which essentially will work out to profit before depreciation, interest, tax, and amortization. How the profit covers my interest obligations which are there currently and all my future principal outstanding. So that typically, if a ratio is 1.5 or 1.6 is a good ratio, because there you're seeing what you're essentially saying is at that particular level of profitability, I'm able to cover all the outstanding principal amount and all the current interest payments by 1.5 times. So that is what we are going to be talking about. Okay, I think there are a lot of questions in terms of what is the software, etc. The number of softwares there. Maybe I should not be, since this is a forum, I don't want to be propagating some names of the software. But what we are going to be doing next week is to take you through how to make a business plan through a software. So you can punch in a few things. Maybe if somebody has some data and you're going to be attending the thing, maybe you can give me the send across a data which I will punch it on live. I will also show you something which is already filled in and how it is. We can also look at one or two cases. Maybe someone can send me something on the service and somebody can send me something on the manufacturing side, and we can punch it live and see what the output is. Okay, so that is something that we can look at. So that is one. Is it possible to prepare a foolproof business plan? I think provided you've done your homework well enough and got all the information that you want and you're satisfied yourself with everything, you can have a good business plan prepared. But again, whether the bank is going to fund you, not fund you, etc., will depend on what they will analyze and see and what opportunities they have with other companies as well. I think Mr. Karthik had asked another question earlier on in terms of the SWOT analysis is said to be quite a static approach to understanding the competitive scenarios. Will Porter's 5 forces framework be a better approach to put in the plan? Definitely, if you are able to talk about it, there is nothing better than the Porter's framework. The reason that I had not, you're free to use whichever it is. The reason why I had not sort of put that out here was, if you look at the SME sector there, maybe they may not be able to get all the sort of information that they want, there. But if you want to talk about it, then you can talk about the, entry barriers to entry, the supplier dynamics, the dynamics of the buyer and so on and so forth. So you can definitely use that there. Mr. Vineet has asked a question, should the sales projections be made by gut feeling? Okay. The answer to that question is there could be a lot of business decisions which are done by gut feel. But when it comes to financial projections, maybe the percentage there based on gut feel has to be a very minimal sort of percentage. So that is what you need to be a little careful about, because you cannot be a little aimless when you see here we are talking about a slightly more organized business compared to what that you would see otherwise. So in some sort of organized business, it might be good to be a little more focused in terms of how you will arrive at those numbers. Obviously, business, there is a gut feel to business, and I think even when entrepreneurs start off a new venture, there is a gut feel that the business will do well based on what you've seen or heard. You can use that gut feel, but if you were going to a banker or a venture capitalist or a private equity investor, there will be questions asked in terms of how you arrived at those numbers. Not obviously you have to give all the details to the last bit, but you should be able to have a fairly satisfactory response to that. Okay, I think another question, Mrs. Sheila has asked a question there. My company has a manufacturing and a trading division, so can I present this as one company of two different businesses? Definitely. I think you can present it as two different businesses. If you have the segment-wise revenue and balance sheet and everything, you can also present a separate balance sheet and also a consolidated balance sheet for both the manufacturing and the trading business. I think Mr. Sudhanshu has asked another question. Providing personal balance sheet, is it mandatory? Is a partner's balance sheet also required? Why is it required when funding is from outside? Okay, good question. The answer to that question is, what is it that you're trying to achieve? You're trying to ensure that you get the funding from the bank without much of a fuss. So all the information that you want to give, which will make that task easier, is something that you will need to give. Obviously, when a bank or somebody is wanting to lend you, they will want to know what the credentials of the partner or the promoters are. So one of the things that they will definitely ask for is the personal wealth of the promoters and the partners. What does it highlight? It only highlights how strong you are from a financial flexibility point of view. If you're very strong, why is the bank asking that information? They don't want any loan to go bad at a future point in time. So they also need to look at the financial strength of the promoters or the partners. How strong are they? What is their financial flexibility? So it will be a good idea to give that. I think Mr. Bhatesh has another question. Sometimes getting market statistics for the business for which we are in, fire and security, is not easy. I think to the extent that you can get the data, to the extent that you can use surrogates, to the extent that you can use information of user industries, whatever information that can be closely available, which is what I said during the presentation itself, that whatever data that you can get which is justifying your action is what one is looking at. Obviously, everybody knows that even if you look at the smaller and medium enterprises, some of the products that they operate in, you will not have data on market share and what the market potential is. So you look at user industries, you look at the umbrella industry under which they operate. That sort of data that is what you are looking at. So, as time goes by and as information, gets freely transferable and there are people collating the data, I'm sure even for your business like fire and security, you will have data which is available. Again, I think Ms. Sheila has another question. How would a plan for a trading organization be different? Now, again here, what are the key things that you will highlight for a trading organization? Now, trading organization, I think one of the things that everybody knows is the margins are going to be, the inherent margins are going to be low. So that is something which is taken care of in the financial section itself. So what should you highlight there? You should highlight what is the business, what are you trading, who are your customers, why have you got into this business, what is the strength of the promoters, how can you scale up the business, despite the low margins, how will my financials be strong and good? So those are things that you need to highlight there. Obviously the contents, etc., the sections, etc., are going to be the same. But since it's not going to be a manufacturing activity or a service activity, these are the things that you will put out. Who are the counterparties that you will deal with? Who are the customers? What sort of terms of trade you have with them? Will collection be a problem? Those are things that you will want to highlight a lot more there, rather than focusing on the financial, because financials you will focus only on what the fund requirements are in a great bit of detail, because obviously the margins there are going to be a lot thinner than the manufacturing company. I think somebody asked, how do you gather market information and market intelligence? You can gather through the suppliers, you can gather through your customers, you can gather through suppliers of your competition, you can gather through customers. So there are ways and means of doing that. Okay. I think there are a number of questions. Let me see how much time we have. Okay. They've asked. There's a question which is asked here: is can we change a business plan at any point or review? Like the targets can change with drastic market changes. Okay. I think from the time that you submit the business plan to the, let's say, to the bank, and at a later stage, maybe there's obviously going to be if they've called for a review or something, you can change the plan at that point in time, because when the bank is calling you for a discussion, and if things have changed dramatically, it might be better to have that plan changed there, because the situation has changed very dramatically from the time that you furnish. So it's better to be true and upfront there, rather than continue to go there and say that we'll still achieve those numbers there. So I think that's something that the bank might appreciate that, rather than looking at a set of financial numbers which have no correlation to what the realistic numbers would be. Any guidelines for choosing a bank or financial institution for making a proposal? Okay, that's a very tricky question to answer. I think there the choice will depend on one, if the promoter or anybody else has already a relationship with the existing bank. So that is something that you need to definitely look at. So if that be the case, then perhaps that should be a choice that you should make first. Or the other issue would be is that if any of these banks have looked at a particular sector very favorably and have lent and to that particular sector, that is something that you might want to look at. Okay, I think that is what the answer to that question will be. I think Mrs. Winnie Hari has a question. I think it's a very, very difficult answer to give. The question is, for trading business which involves US dollar transaction, how accurate can the business plan be? Okay, the answer to that question will lie in terms of the projections and the sensitivities that you make on the projections. I think there you need to be able to take a call. I know it's a very difficult call that you will make, because a lot of people, who are in the field itself are not able to take a call in terms of how the dollar will settle with the, or how the rupee will settle with the dollar rate. I think there what you need to take a call is in terms of looking at a few sensitivities in terms of how the dollar and rupee parity will happen, and maybe look at 2-3 sensitivities and take that, and based on some informed decision, have 2 or 3 sensitivities in terms of what the dollar to rupee price will be, and also take a position in terms of what the dollar price will be, and go with that as a likely scenario. Now that is what you can do. Obviously, the accuracy level of the projections may not be of a very high order, given that there will be a movement up and down all the time. So you can look at an overall a realistic sort of a number there. I think Mr. Uma Mahesha Rao has another question. Payback period, return on investment part of the business plan? Yeah, definitely it can be looked at as a part of the business plan. You can have one sheet which will talk about, I think essentially if you're a new company and doing a project, I think one of the things that you will calculate was all the DSCR, the IRR numbers, etc. Along with it, you will have the discounted payback period, not the simple payback period, return on investment. And that will set, because how are those numbers calculated? They're all calculated based on your future financial projections and assumptions. So you can have it all together at one spreadsheet. Mr. Shanmugam has asked 2 questions. The first one, what would be the ideal time frame for a business plan, whether it's 1 year, 2 years, or 3 years? Now, typically, you need to have, a reasonable amount of time frame for a business plan. you should have at least a 3-year business plan, so that the users of the business plan, whether it's an investor or the bank, have a reasonable idea of how the company is likely to head. I think giving a 1-year business plan may not make much of sense to them, because what happens if none of those numbers are achieved in the first year? So there'll always be in a dilemma in terms of what to do with this company. So it is always good to give. It is always good to give the perspective of a 3-year business plan, so that they are also clear that the entrepreneur is there to stay. He's not somebody who will come for a year, get the money, and then the business will shut down. Okay. Mrs. Sheila Narsingh Rao has said that I put in foreign exchange fluctuation as a risk factor. Is that right? Very much right. It's a risk factor along with many of the other variables that you will do. I think someone wants to know what will happen in the next. I think Mr. Bhartesh, will we have a detailed business plan discussed in the next session? Yes, that is what I am planning to do, and it will be useful if somebody has. I can actually pull out something and show you how there is, and in the software, how if you put something, what will get churned out. So that is one way of looking at it. The other way, which I thought was, if somebody has, and maybe you can write to CII with some details of, now know what should go into a business plan. So if there's somebody in the service industry and somebody in, let's say, trading, and somebody in manufacturing and services, if you can send all these details to Mr. Rao by mail, then maybe we can do it online here and see what is churned out. Maybe financials, we may not be able to plug it in the short time that we have, but definitely we can attempt to do that. Okay, I think Mr. Shanmugam Pillai wants to know what is there in the cash flow. Will direct expenses be there? Yeah, this is what is there. So you'll have all the. We talk of cash flow, it is essentially all the cash expenses that will get incurred. So whether it is rent, whether it is lease, whether it is a payroll, all these direct things will be part of it. Now, how is the cash flow statement generated? It's all generated from it's a derived statement generated from your profit and loss, and also from the balance sheet. So that is how it is going to be generated. Okay. I think another question Mr. Karthik has asked, Karthik Arun Rao. There are two Mr. Karthik. Which performance amongst the NPV, IRR, and XIRR is ideal for market acceptance? Now, typically, in any project report or project analysis, you will calculate the NPV and IRR. So typically, you will be looking at both of those numbers, the NPVs and IRR numbers, to ensure that they meet those cutoff norms and the sort of return expectations, or the sort of cost of capital that you are going to be putting into the business. So that is something that will be looked at. So when all these numbers are looked at, you also will look at, whoever is evaluating will also look at what is the industry prospect, what is the sort of growth prospects in the industry. It's like saying that, when mobile operators came into existence the first time, I don't think anyone had much of a clue in terms of how the demand will be, how the minutes of usage will be, how much will consumers pay. But then maybe a lot of faith was placed on the potential for mobile phone if prices drop down, because at that point in time, and I think I was also in CRISIL at that point in time, and we had also gone through very similar sort of discussions. The tendency was always to compare it with Asia Pacific countries, what happened in Singapore or what happened in some other countries. Well, initially those sort of assumptions were all right to make for a start, but later on it was found that the Indian scenario was very, very different once prices came down, or the minutes of usage went up and the cost of not only the handset, but also the cost of using the phone, whether it was prepaid or postpaid, also came down significantly. And at times, as somebody said, gut feel also is something that, will come into play there. So you'll do all the mathematical calculations and some amount of gut feel and some amount of confidence about, what the promoter says. Okay, so that is what you'll do there. I think, okay, Mr. Uma, I'm sure that is the thing which is there. I think a lot of people are very curious in terms of what we need to cover in session 2. Okay, the time that we have is 2 hours. So what we can look at is, I think it's still open, and I think I will take the feedback from all of you here because you attended the first session. We can look at 2 things. I think now that we know what the elements are, there are 2 things that we can look at. One option is to look at the business plans of all the 3 sectors, that's manufacturing, service, and trading. Again, that is one option. The second option is when we have that. See, the reason why that software is there is because many entrepreneurs do not know what to do with an idea, and they do not want to spend on hiring some consultant to do it. So this is a simple mechanism, and I think various governments, including state government of Tamil Nadu, etc., spent a lot of money in terms of encouraging entrepreneurs to use various softwares through the entrepreneur guidance cell to use these software so that they can furnish the business plan to the bank and then start off on business. So one of the options there for us is to look at maybe some of these live examples wherein some of, as I said earlier, could write and give in all your information and then we can see how it looks. Maybe someone from trading, someone from manufacturing, service and retail. That might be an option there. I can also show you a filled in one of those companies. So that is what we could look. That is what I've actually planned to do. Mr. Uma Mahesh has asked another question. Is our payback period or return on investment part of business plan? Our payback, yeah, they can be shown as part of the business plan. Mr. Karthik has a question. Can you suggest established P's investing in manufacturing firms? I don't have the names here right now, but I have it somewhere here with me, but maybe I'm not able to tell you offhand. Okay, Mr. Bhatesh has another question. The overheads, do you need to do it in absolute numbers or you can do it as a percentage? Again, that based on you can take a particular having an absolute number there initially may not you may not be able to do it. So you can take a rough percentage there based on what some of the others in that particular industry do if you're able to get that data. Once you do it for 1 year, then I think the subsequent years, once you have the actual numbers for a year, subsequent years you can take it as a percentage and then maybe slowly scale it up till there is some sort of stability in terms of what the overhead numbers are. So Bimal has asked a question. If the turnover is reduced, whether it's advisable to restructure the, I hope it's not restructuring the bank loan that you're taking already. Okay. Any variable in the turnover, any changes in the turnover, that will have an impact across the board, your balance sheet, your cash flows and everything. So obviously, since the way you construct a balance sheet and the way you use a balance sheet, all of these are linked Excel sheets. So you change something, the rest of it are all linked to it. So that will also change in the course of time. So definitely you will need to change all the other numbers because the ratios, etc., will change. Okay. Mr. Shanmugam has another question. any fluctuations in the projected plan during the middle of the financial year, how the risk is managed. I think that is what I mentioned there. I had listed out 3 or 4 of those risks which can come. There could be many more which will come along the way. How you manage that risk? See, obviously at the beginning of the stage where, or the beginning of the operations, that's the very first year of operations, you may not be able to anticipate all the possible risks that will come your way. Okay, so the first year is going to be a year wherein you have to live with certain risks, manage the risk, and move on. You may not be able to list out, these are the risks that I will be faced with. There'll be different things that will come up. Suddenly there might be an electricity, the power cuts might get reimposed. Then what do you do if you not have the backup generator? Then you will try and address that problem. Now, if that happens and the production gets delayed or derailed, then your customers will start, asking you what is happening to my product. Then you might lose some customers, for instance. So various things will happen. You can manage, you can try and see if you can box in everything to the extent that you can. But, it will take some time for you to stabilize and settle it before you are fully geared to have a very, smooth sort of operations. So risk, how you manage the risk depends on what is the risk that you will be faced with. You might be forced, I think that example that I gave you, what happens if the competition cuts down the prices? You might be forced to, follow suit. It's like the airline industry. Let's say one of the airlines is, cutting the price. What do the others do? They have no option but to cut down the prices. Or any of the mobile operators, they are cutting down on the, charges. The others will also cut down the charges. But then you will try and see how profitable you can be by seeing how you can cut down on the costs. That is how one operator is more profitable than the other operator. Or how your funding is structured. Are you having less of debt compared to somebody else? So those are things which will evolve over a period of time. I think Mr. Karthik has asked another question. Is it wise to show the free cash flow calculation from all the projections and then estimate the value of this business in the plan itself? I think when you make a business plan itself, I think what is your purpose of the business plan is a question that you need to answer. If your business plan is going to serve the purpose of you getting a loan from the bank, or if that is going to be the plan, maybe that's an exercise that you may not want to attempt at that stage because a lot of things are still a little fluid at that point in time. How much sales you will achieve, what are the sort of cash flows that you will have, what are the free cash flow that you will generate. Much of it is still in a question mark stage. But once you are confident that things are stabilized and everything is going fine, then your projections also will become a little more crystal clear and a little more stable. Now, valuation, etc., by somebody else will be a slightly more long-term sort of view, maybe 5-6 years that you will take before an investor or venture capitalist or anybody else is looking to divest. So they will do their own calculations. I think maybe that's an attempt that maybe you should not start off, right away. Okay, I think Mrs. Hari has asked a question. Maybe that might be the last question that we'll have time for. So I think the rest of them are all, can be basically, I think the 4 or 5 which basically talk about the software and other stuff. So I think, will you receive the details, Mr. Shiv Shankar Kumar Suman? Yeah, I think you will get the details in the next session. Okay. So based on whatever inputs that I've got, let me configure what the next session would be. So I will mail to Mr. Rao, who will communicate with all of you at another session today. So this is the last question. How will the business plan look like for cross-country tradings? So there again, you will look at who the customers are, especially from the marketing point of view. Then you'll also look at the exchange risk will be a big risk that you will be looking at how you're going to be addressing the exchange risk, how that will impact your profit and loss statement. Who are the sort of counterparties that you're dealing with, payment terms, supply terms, and so on and so forth. So that is how you look. So basically, it's going to be a lot more involved than a typical, India to India sort of, trading. So there'll be a lot of elements which will impact the market side of your business plan, the financial side definitely, and also on the operations side. So great. I think there's been a lot of, I'm very happy that there's been a lot of interest in this topic today and number of very good thought-provoking questions. And I'm hoping to see most of you at the next webinar. So details of that, once since I've received the inputs from many of you in terms of what you would like to see, so we will try and attempt to do that next week, and you'll get a communication from CAI on that. So thanks very much, and have a good day.